Bill Murphy, Chris Powell, and Ed Steer. Bill Murphy and Chris Powell are respectively Chairman and Secretary-Treasurer of the Gold Antitrust Action Committee, GATA. Ed Steer is a member of the GATA Board of Directors and Market Analyst for Casey Research. Today, we will be focused on what these staunch crusaders for gold market transparency and against price suppression have to say. For GATA's gold market manipulation update, please give a warm welcome to Bill Murphy, Chris Powell, and Ed Steer.
Thanks, folks. We're the Gold Antitrust Action Committee, and we have for more than 12 years now, we have documented the manipulation of the gold market by Western central banks in order to suppress the price, support their own currencies, rig various markets, including the government bond market, and generally prevent their own currencies from being held to account for their mismanagement. Our premise becomes more and more a matter of public information every day, and in the last month there have been really several telling developments. First, perhaps most important, a month ago we obtained and published a confidential International Monetary Fund report from March 1999 which recorded the IMF staff's surveying of Western central banks in pursuit of more transparency in their gold holdings. The IMF staff wanted Western central banks to report and distinguish their gold swaps and loans from their general gold reserves. The IMF staff report, which we obtained from March 1999, disclosed that Western central banks refuse to disclose their gold swaps and their gold leases because that information is considered market sensitive, and its disclosure would impair the secret market interventions in the gold market by Western central banks. Now this report is as much of a confession as anybody is going to get of the Western central bank gold price suppression scheme. But a pretty good second place may have turned up a little while after. We got a copy of a speech given at a World Bank and Bank for International Settlements conference in Washington in December, given by a fellow named Ted Truman, who was a former Treasury Department and Federal Reserve official of long standing. Paul Krugman of the New York Times has called Truman the George Smiley of international economics, George Smiley being the famous spy in the, I guess, the John le Carre novels. Truman is a bit of a shady character, but he gave this speech last month to this BIS World Bank conference in Washington, in which he said that the Washington Agreement on gold is the modern counterpart of the London gold pool of the 1960s, which rigged the gold price. Well, this was a really wonderful, candid disclosure that the Washington Agreement on gold, far from being meant to support the gold market, as the Western central banks participating in it said at the time, was actually meant to rig the gold price. It's another pretty candid admission that Western central banks are in the gold market rigging business. You heard Peter Spina talk a few minutes ago about the Bundesbank's sensational request last week to repatriate some of its gold, but it's going to get only 300 of its 1,500 tons out of the New York Fed, and that's going to require 7 years. This is more support of the suspicion that Western central bank gold has been leased and swapped and hypothecated and rehypothecated 6 ways to Sunday, and is vastly overcommitted, and that perhaps 60–75% of the gold the world thinks that it owns it doesn't exist. It's just a paper claim on metal that has been swapped or leased into the market and really can't be recovered in anything less than 7 years through new mine production. We're sometimes called a conspiracy theory organization. This could not be more incorrect. We're a public records, freedom of information, accountability, and government organization. We have collected admissions such as I've just described to you, government records, statements by former central bankers confirming that Western policy has been to rig the gold price and really to rig various markets, so much so now that there really are no fundamentals to trade on. The only trading we can do is based on our surmising what government policy is going to be next. But we don't have anything to do with conspiracy theories. We merely collect the public record, the official documents, the official statements, and we publish them in the documentation section of our internet site, GATA. It's GATA.org, and I just beg and plead with financial journalists all the time, don't take our word for anything. Just do us a favor, attempt journalism. If you don't think that the gold market is rigged, please call up your local central bank and ask to see documentation of their gold swaps and leases, and ask them for the records of their account at the Bank for International Settlements in Basel, Switzerland, which is the gold trading broker for Western central banking, and ask to see the record of the gold trading through the BIS. If you look closely at the BIS's annual report, you'll find that about half the income of the BIS is made through gold trading on behalf of their Western central bank members. In fact, a couple of years ago, we posted at our internet site a PowerPoint presentation made by the Bank for International Settlements to advertise itself to prospective Western Central Bank members. That PowerPoint presentation advertises, among the services of the Bank for International Settlements to its members, is secret interventions in the gold market. Now that BIS PowerPoint presentation, of course, is in the documentation section of our internet site. All financial journalism has to do to confirm the gold price suppression scheme is ask a few simple, specific questions of Western central banks and the BIS and be turned away that, this is, too secret, that too market sensitive, you can't know this. And we beg financial journalists to do this every day, really without too much success, though I think the Bundesbank repatriation is beginning to open a few minds, making some people in journalism think that, maybe the complaints about gold market rigging are not so far-fetched after all. We have a reception tomorrow night for fundraising purposes. We'd really appreciate if people showed up. We'd appreciate even more if they showed up and brought some metal, some gold or silver or platinum coins or bullion. We're going to have a display case there and a coin dealer and appraiser who will give people a receipt for those donations on the spot and purchase them from GATA so that we might raise a little money to go on. If we raise enough money, we will bring new Federal Freedom of Information Act litigation in U.S. District Court for the District of Columbia in Washington, D.C., such as we brought against the Fed 3 years ago. We extracted some very incriminating documentation from the Fed in our first lawsuit. We got an admission from the Fed that it has secret gold swap arrangements with foreign banks, very incriminating document. We have filed much more extensive gold records requests with the Fed, the U.S. Treasury Department, and the State Department. We've included the State Department because we want access to all the U.S. government's international agreements involving gold, public agreements and private agreements. That kind of litigation likely would cost us $150,000, $200,000 just to begin with. If we ever raise that kind of money, I think that's what we would do next. I think it would be very devastating for the gold price suppression scheme, and it might prove, I hope anyway, to be the fatal blow. Anyway, our reception tomorrow night is going to be at the Pan Pacific Hotel's Cypress Room from 5 to 7:30 p.m. It's up on the restaurant level at the hotel, the second floor. There should be a sign out front. There'll be free snacks if you get there before the GATA board gets there. There'll be a cash bar. John Embry is going to be Master of Ceremonies. You probably have heard of him from Sprout Asset Management. And our speaker will be Bob Bishop, the retired editor of Gold Mining Stock Report. So those are pretty good people to hear. They're they're big supporters of GATA, and we'd really need some support if you could spare it to us. I've got some invitation cards that I'll leave up here on the stage when we're done with the details for that reception. Also, we've got a lately scheduled workshop tomorrow at 11 in the morning in workshop room 3, where Bill and Ed and I will be there, answer some questions, just say thanks to our friends here in Vancouver. So do think about showing up at our reception tomorrow night, 5 to 7:30 at the Pan Pacific Cypress Room. Bring metal or cash or credit cards. We'll be able to take credit card donations, and I think we'll have a nice party there for a couple of hours. Next, our chairman, Bill Murphy.
Hello, everyone. I'd like to start off by saying it's great to be speaking in front of so many smart people, and I say that because we're coming up here, I was watching CNN, and they said that the people in Vancouver are the fourth smartest of any city in North America. I think New York was fifth, so anyway, I thought I'd pass that on. I'm going to speak about conspiracies and GATA, and then I'm going to get to one that I believe that's going to make you a lot of money this year. First of all, conspiracy, it's pretty simple. It's just an unlawful, secret plan formulated by two or more people. And actually, it is much more commonplace, or they are, than not. I mean, just recently, there's been a LIBOR interest rate scandal involving many of the bullion banks this past year. Enron, the big oil company, that was a big scandal, a conspiracy. Bernie Madoff, a Ponzi scheme, they conspired to keep the truth from the public. So it's not far-fetched. The Justice Department said in 1999 there was an epidemic of price-fixing cases, which are conspiracies. Now, GATA was formed in January of 1999 to expose another one, the rigging of the gold price, price suppression by bullion banks, the Fed, the Treasury, the Bank for International Settlements, as Chris spoke about, the Bank of England, and so on. Over the years, we have been mocked as tinfoil hat people, conspiracy theorists, and so on. But in reality, what the mainstream does, and the rich and powerful, is to marginalize people like this by calling us, conspiracy people, as if we were talking something like Martians or like that. But all we've done is had the gumption to take on these rich and powerful people who love to push the little guy around, and we decided not to let that happen if we could do anything about it. And they get away with it because there's no rule of law. I mean, the CFTC is a joke. It is truly a joke. And there's no fear of repercussions, so it goes on. And I had some fun with this, just to think about conspiracies in general, and really just how prevalent it is. Some of you may know about this Penn State football nightmare in which Joe Paterno was a legendary coach because he was known to have scholar athletes, and the guys graduated, and he was the most revered man in America. Well, a guy in his team was molesting kids, Jerry Sandusky, and they conspired to keep that going, and all the little kids were continued to be molested. That was a conspiracy. You've got this latest thing with Lance Armstrong, who was an institution all by himself. He conspired with doctors and teammates and other people to hide his doping activities, and finally he fessed up. That was a conspiracy. And then just recently, in a bizarre situation, you've got this Manti Te'o who was up for the Heisman Trophy finalist, a Notre Dame star linebacker, who was seen all during the years he was running for the Heisman, pointing to the sky with his girlfriend who had died and his grandmother who had died on the same day. The problem is the girlfriend didn't exist. And Notre Dame knew about this, supposedly what they said, December 26th, before their national championship game against Alabama. They didn't say anything. They all knew about it. And I wanted myself when I heard about this because the players knew about it. Notre Dame played terribly. The star number 2 player supposedly in the country played terribly. Did the bookies know about it? I mean, before the game, betting on Alabama. But the reason I wanted to go into that one specific thing is what Chris was talking about. The press, even themselves, are all getting on each other because it took some internet thing called Deadspin to expose this thing, which is a really big deal. And they were saying, why didn't the press ask any questions of this thing that was ongoing for 3 years? And that's what Chris was talking about. Why don't people at least take what all that GATA's put together and go to the Fed and other institutions and ask them to answer the question. But, you know, it's just something that they just don't want to go there. So, conspiracies are everywhere. And I'd want to get into one that I think is going to be a big deal in the coming, I don't know, weeks, months, but certainly this year, and that has to do with J.P. Morgan and the silver market. I think silver is going to explode, which I'll get into, but there's been a great deal of more evidence presented to the Commodity Futures Trading Commission about Morgan. Of course, they won't do anything about it, but it is going to surface in some way sometime this year, especially here in Canada, and we think it's going to be a big deal, and I'm very much looking forward to it. But I think, and this is going to be, when it's exposed, it's going to be part of the reason, just one reason, why I believe the price of silver will make all-time highs this year and head towards $100 an ounce much faster than people think. And it's real simple. I mean, you'll probably hear about it from some other speakers at the conference, but the physical market's very tight. It's very hard to buy it in size. Metal's moving from Asia to London. The premiums are starting to soar. When it comes to buying silver bags and coins, they're going into shortages. And many of you may know that the U.S. Mint has had to cease Silver Eagle coin sales twice already this year. So J.P. Morgan is going to continue to huff and puff and do whatever they can to prevent this from happening for many reasons, which I don't have time to get into. But I think this time it's going to fail. We are very close to the tipping point when silver really starts to take off. So people can call us, you know, conspiracy nuts or whatever they want to say, but we've done our homework. We know what's coming, and I think that people get involved in silver from here on in, if you aren't already, and especially in the silver shares. It's going to be a banner year, and a lot of money is going to be made. So thank you for coming. And now our board member, Ed Steer, is going to clean up for us.
Well, thanks very much, Bill, for talking about silver, because that's exactly what I'm going to talk about. I don't know how many read my column, but every Saturday I talk about what's called the Commitment of Traders Report. And I run a chart by Nick Laird called the Days to Cover Short Positions. There are 22 physical commodities traded on the COMEX. There's rough rice and crude oil and soybeans and wheat and soybean oil and cocoa and, of course, gold, silver, platinum, and palladium. They're all traded on that market. And the concentrated short position, the short positions of the 4 largest and the 8 largest traders are what come out in this COT report every week. How many contracts of the total open interest are the 4 largest traders and the 8 largest traders on the short side, which is what I watch. The long side is so split up it doesn't matter, but the concentration on the short side is absolutely unbelievable. And the first slide, Rich, if you could put that up, please. Or do I just press a button? Thank you. I don't have a pointer, but you can see from this chart, this is all 22 commodities. And everyone has got a green bar, and everyone's got a red bar right beside it. The red bar is the short position of the 4 largest traders in that particular commodity, and the green bar associated with that commodity is the position of the 8 largest traders. So the difference between the 1 and the 4 and the 5 and the 8 is just the difference between the red bar and the green bar. The one on the left-hand side is rough rice. I don't know if you can read it or not. Then crude oil. You can see that in most of the commodities on this chart, getting up to cocoa, there's almost no short position held by the 4 largest and 8 largest traders. Once you get to cocoa, that's a very special case because of the commodity that's been in a major bull market now for many years. And it went from a total obscurity on the left-hand side of the chart to the right-hand side of the chart, and they have all kinds of problems with cocoa. It's in very short supply. And if you bought chocolate bars over the last 5 years, you know that quality chocolate bar has gone way up. Anyway, that circle there, the large circle, shows you the 4 precious metals. There's palladium, gold, platinum, and silver. And silver has always held that far right-hand position. And what this chart shows is the days of world production that it would take to cover the short positions in all these commodities by the 4 largest and the 8 largest traders. And I've highlighted silver, but you can see that the 4 monetary metals, especially gold and especially silver, have the largest concentrated short position by the 4 and the 8 traders. And I'm just going to go to the next slide now. and it just highlights silver all by itself. There it is. Now, there's two bars there. Like I said, the red bar is the 4 through 8, and I'll tell you, or the 1 through 4 trade, the 4 largest traders. And I'll just tell you right now, that red bar is 122 days of world silver production, which is what? 4 times 3, that'd be about 4 months' supply. Of that red bar, JP Morgan is short 73 days of world silver production. And our beloved Bank of Nova Scotia here in Canada is short 25 days of world silver production. Hong Kong Shanghai Banking Corporation USA, which is a totally different legal entity from the HSBC that we know here in Canada, is short 17, and Citi's short about 7. That makes up all 4. So you can see that 4 traders are short 122 days. That, just the general shape of that graph shows you, if going from left to right, that the precious metals are heavily shorted by a very, very small number of traders. So on the left-hand, on the red bar, the 4 traders, and you'll see the marks on each. I'll have to click ahead here. There it is. The first black bar is where that's JP Morgan's short position, and I added on top of that Bank of Nova Scotia. Then there's HSBC, and that tiny little bit of the red mark above the last black, the top black line there, is a position of roughly Citigroup. Now these are very close guesstimates, but this, if you could see the actual numbers, in the Commitment of Traders report, this is what it would show. These 4 traders are short all of that red bar, just those 4. And if you go over to the far left, rough rice, and look at crude oil, it's the largest market in the world and has the second smallest short position by all the traders. And like Ted Butler pointed out, he says if crude oil had a short position as large as silver, it'd be about 7 million COMEX contracts, which is preposterous. Well, silver is preposterous if you take a look at that. Now, the green line extends further up, of course, but there's the 5 through 8 traders take up from the 122-day mark to, I think it's 150 days. So you can see that the concentrated short position in silver is very, very tightly held by these 4 bullion banks, and JP Morgan is the principal player in here. They have the largest short position at all, about 150,000 ounces worth. And the Bank of Nova Scotia, which I just discovered back in October. Don't want to get into the bank participation report, but what it showed and the CFTC put on their website was the fact that a new bank, a new non-US bank, is now required to report its short positions as a banking entity. So that blew out the short position, and my first suspect was Bank of Nova Scotia because their trading arm is Scotia GATA. Now, Scotia GATA is a separate entity, or was up until about 7 or how many years ago did Scotia GATA get bought up by Bank of Nova Scotia? GATA. GATA got bought up by the Bank of Nova Scotia, and Scotia GATA has been trading as not part of the bank. But finally, the CFTC said, look, you're part of Scotia Bank, so now you're required to report it as a bank. Because JP Morgan wasn't short the silver market until they bought Bear Stearns back in 2008 or 6. Then all of a sudden, when Bear Stearns' short position in silver showed up in JP Morgan's books and the short position blew out, this chart wouldn't look like that. Okay. So the Bank of Nova Scotia, I emailed the Bank of Nova Scotia and said, look, are you the new non-US bank that's reporting now on your Form 40 to the CFTC every month? And all I need is a yes or no answer. They didn't say no, okay? And they skirted the question, avoided it, answered different questions. They just did absolutely everything they could to avoid saying yes, but they did not say no. All they had to do was say no. So it's obvious to me, and it's great sadness to report that Canada, as Bank of Nova Scotia, is massively short, not just the silver market, but they're also massively short the gold market too. And I think that JP Morgan and Scotiabank are the 2 principal players in the gold market as well as the silver market. So just looking at the general shape of that graph, you can see that it's the 4 precious metals that are receiving special attention, where they got their thumb on these things. And as long as they're sitting there, the price isn't going to go very far. And one can only imagine what would happen if those short positions disappeared. And as Chris Powell and Bill Murphy alluded to, nobody knows what the free market price of silver is, and I can guarantee it's not $100 an ounce. Okay, it's many multiples of that, but we just don't know it. And when you suppress gold, silver, all commodities are suppressed as well, and that includes wheat. I can tell you, once silver and gold break free of these bonds, you're going to find that all those other commodities are going to increase vastly in price as well. So that's what's called a concentrated short position. And you can see just by looking at the chart that it's all in the 4 precious metals, and as long as they're sitting there, the prices are going to remain at these levels. But sooner or later, they're going to have to let them go, and the Germans know that, the Russians know that, the Chinese know that. And I was absolutely floored last Monday to see that Germany repatriated its gold. If somebody told me that Germany would be number 2 after Venezuela to take the gold back, I frankly wouldn't have believed them. So it was a big shock. So everybody knows that the fix is in, and now everybody's taking their gold out of New York before they slam the door on that, because the American government took people's gold away in 1933 with Roosevelt, and they closed the international gold window in 1971. And I can tell you right now, if they're desperate enough, and they are, they may decide that, possession is 9/10 of the law. And all that wonderful gold that's sitting in New York that belongs to other banks may end up belonging to New York Fed permanently. So there it is. I have nothing else to add. Is there anything you wanted to say, Chris? Do you want to open it to questions or what? Okay.
Thanks, Ed.
Thank you very much.
We got 5 minutes left here, and I think we'd be delighted to take any questions. If you can get to a microphone so others would hear, that'd be good. Go ahead, sir. You got the mic.
Previous commentator commented on Gold Resource Corp as providing gold bullion or silver coins or gold coins. Do you think that will be a trend for gold mining companies or silver mining companies?
The question is, will companies follow Gold Resource Corp in issuing their own coins? So I think in the United States, we have to call them medallions. We can't pretend that any privately issued gold or silver constitute coins, because coins are money. There are some silver miners that are already doing that. First Majestic is issuing medallions in various denominations. I certainly can only hope it happens. The whole purpose of GATA has been to recognize gold's historic and future role as money for free humanity. And if the mining companies themselves can't see that, we got a long way to go. Sir?
If and when the silver short side falls apart, would you expect the other 3 precious metals, gold, platinum, and palladium, to rise in tandem with them? And if so, would that be instantaneous or as a kind of a fallout situation, or what?
Well, we don't know how much metal and how much money the Western central banks are still prepared to lose in support of the monetary metals price suppression scheme. I can just point people back to March 1968, when the London gold pool collapsed overnight. In really a matter of weeks, the United States gold reserve was drained through the London gold pool from about 25,000 tons to the 8,133 or so tons that we have today. There was emergency cabinet meetings and Treasury Department meetings and freight planes flying gold over to London. The Bank of England was advancing its own gold reserves to help the London gold pool keep the price down before the U.S. gold got there to replace the British gold. Whatever happens, I think it will happen overnight when the central banks make a decision to retreat abruptly to a higher level. If silver goes, all I can speculate on that is there'll be a real hard time for the financial authorities to explain why, in the middle of a worldwide depression, demand for what is supposedly an industrial metal has just exploded. That will not be easily explained. Will the authorities want to explain about this vast short position that's been run by their agents in the bullion banks for years, and that so much of the silver, the investment silver the world thought it owned, didn't exist? If silver takes off without gold and the other ones in the middle of a depression, boy, I think even the Financial Times might have to ask some difficult questions. But this is just speculation, sir.
A few years ago, when Rothschild pulled out of the London gold market, and they were responsible for the AM and PM fix on gold. Scotia Makata, I believe, took over that role. Who runs the gold fix in London right now?
Well, it's a group of banks. I don't know them off the top of my head. We could find them for you on the internet, but it is still a group of banks. I've always wondered how they get away with setting the price that way in terms of the British Competition Act, which is the basic British antitrust law, which has similarities to U.S. antitrust law. Why you permit competitors to sit in a room together, or at least supposed competitors, and adjust prices is a little bit beyond me. But I imagine that is approved in regard to gold, because the governments themselves have a great interest in the gold price and fixing it, and I'm sure they put a word in the bankers' ears and operate through the bankers themselves as their bullion bank agents. But when the London gold pool crashed in March 1968, it was simply shut down for a few weeks. The market went elsewhere, and we're hoping that that'll happen again in our lifetimes. We got 30 seconds. One more, if anybody's got one, sir.
Chris, I'm sorry. Chris, it's Ed.
Oh, I'm sorry.
Okay.
Somebody's waiting.
I just wanted to, this gentleman here, if you go to the LBMA website and look under market making members, there's a list of about 12 of them, and it shows who's responsible for the AM fix and the PM fix in both gold and silver. It's right on the site.
Last one, sir.
Yeah, just in a short, simple manner, why are they doing this?
Because gold is a competitive currency, and if you read the academic literature, such as was written by Larry Summers when he was a professor of economics at Harvard with his colleague Robert Barsky, professor of economics at the University of Michigan. They wrote a paper, I think back in the late 80s, called Gibson's Paradox and the Gold Standard. They examined the historic inverse relationship between the price of gold and real interest rates. The implication of the paper was that governments could achieve their nirvana to get low interest rates and high government bond prices if they could just seize control of the gold market and control the gold price. Gold is a determinant of interest rates, government bond prices, by definition the value of other currencies, and really the valuation of all capital goods, services, labor in the world. That's why they do it. And it's potentially a market they can't control. If they can control the currency markets, the interest rate markets, the bond markets, they can control all valuations in the world. Markets in gold and silver imply markets in everything, and markets imply democracy, and unfortunately that is not the policy objective of Western civilization at the moment. Thanks all for coming.